Thanks for joining us from the Ohio AgNet Voice You Know What the News You Trust studio, sponsored by the Family Forest Carbon Program, where we help family forest owners get paid to improve the health of their woods. Cattle futures could not find sufficient buying interest to maintain the early gains yesterday. This resulted in futures maintaining the recent downtrend. The friendly cattle on feed report has not been enough to offset last week's lower cash trade and the anticipation of lower cash again this week. Packers may not need to be very aggressive this week, as they have been able to surround themselves with more supply over the past few weeks. They will need to buy to maintain slaughter, but feedlots may not see the aggressiveness that they've been seeing. On the hog trade, they may have reacted earlier than usual ahead of the quarterly hogs and pig report. The overbought market may have been a reason, as traders decided to take some profits ahead of the report, just in case it's negative. If it isn't, traders will view it as a buying opportunity and re-enter the market. Packers were aggressive on Tuesday, with the National Day Direct Afternoon report showing a gain of $2.14. Also, the average estimate of all hogs and pigs for the June 1 estimate to come out is 99.8 of a year ago, kept for breeding at 99.9, and hogs kept for marketing estimate at 99.8%. Today's weather brought to you by Seed Consultants. Simply better performance online at seedconsultants.com. Here's the forecast.
On again, off again, moisture, a part of the forecast here through the rest of the week. I'm Chief Meteorologist Ryan Martin. Quick forecast update for you here in Ohio. Heat-based activity is still possible today. We're going to be seeing pop-up scattered showers and thunderstorms across about 40% of the state of Ohio. When we're not seeing moisture, we can see clouds mixing with sunshine, and this pattern is roughly the same through the rest of the week. We may see a few hit and miss, or a few less hit and miss showers and thunderstorms for Thursday before Friday ramps up with good statewide coverage. Over the weekend, pop-up scattered showers and thunderstorms both days, and then Monday into Tuesday of next week, a frontal boundary finally comes through, gives us a good chance of rain and thunderstorms. That leads to a dry rest of next week, but plenty of moisture potential between now and then. I'm Ryan Martin.
And thanks, Ryan. Well, oil futures continued its downward trend on Tuesday after plunging by an average of $4 during the day, following a fragile ceasefire between Israel and Iran, brokered by U.S. President Donald Trump the prior day. The front month New York MEX WTI futures contract fell by $3.97. The ICE Brent futures contract for August delivery dropped $4.19. Oil future prices have now accumulated a $9 loss since the United States attacked 3 Iranian uranium sites on Sunday. President Trump pledged that Iranian retaliatory strike on a U.S. base in Qatar did not warrant a military response. Trump also announced a ceasefire between Israel and Iran, which removed the geopolitical risk premium that had propelled oil prices to a 5-month high over the past 2 weeks. Although Israel confirmed the ceasefire on Tuesday, it launched 3 strikes on Tehran in response to an alleged violation of the agreement. Analysts had anticipated a limited and largely symbolic strike, given Israel Prime Minister's statement on Tuesday that Israel had achieved its primary war target. In domestic news, the domestic economic news for U.S. consumer confidence fell in June, with an index dropping by 5.4 points to 93. According to the Conference Board report released, the Expectations Index, which reflects consumer short-term outlook for income, business, and labor market conditions, dropped by 4.6 points to 69, remaining below the threshold of 80 that typically signals a recession ahead. The average 12-month inflation expectations eased to 6.0 in June, down from 7 in May. Tariffs remained on top of consumers' minds and were frequently associated with concerns about their negative impacts on the economy and prices, the report said. Time now for the Midday Market Analysis, provided by Leist Mercantile and sponsored by Brandt, helping growers take control for over 70 years.
This is Ryan Metzger with Leist Mercantile, providing you with your midweek fundamentals. This week we have seen a sell-off on wheat futures that can be attributed to a combination of factors, such as the removal of the wartime premium following the sudden weakening of crude oil, led by the cooling off of tensions we're seeing between Israel, Iran, and the U.S. We're also entering into Northern Hemisphere harvest, where farmers are expected to be selling off the back of the combine, and that will tamp down board rallies. So in order to get board to rally further, we would need to see that be demand driven. Please visit our website, licemercantile.com, to learn more about our grain marketing program and crop insurance services.
And thanks, Ryan. Today's market's brought to you by Seed Consultants. Simply better performance online at seedconsultants.com. July corn down 6 at 4.10 1/4 cent. December down 5 3/4 at 4.23 1/4. The July beans are down 6 1/4, trading $10.40 1/2 cents. November down 5 1/2 at 10.31 1/2. July wheat down 6 at 5.29 3/4. September down 5 at $5.47. In livestock, June cattle up 50 cents at $222.10. July lean hogs down 32 cents at $111.90. And September feeder cattle up 42 cents at $302.90. Thanks for joining us. This is the Ohio AgNet.